Hello guys, Dex here. Welcome to this video. So today I'm gonna go over my 22,000 profitable trades that I placed last week, and also a trade that I missed. I think I missed about another 50,000, and I'm gonna go over pretty much all my thought process for those two trades. And before I start this video, make sure you click the like button and subscribe. And also we have a sale going on for the holidays, so make sure check out the link below, and let's get into the video. So the first one I want to go over is HOTH. This is the ticker that I missed. Now, whenever you want to spot a multi-day runners, you want to actually know where the extension started with. And it's typically started after a red day in between. So the extension can only be counted starting around 2.4, goes all the way to 7.6. Typically we need 300% extensions for multi-day runners, so 2.4 times 3, that's 7.2. So it just barely met the minimum 300% extension. And here is the massive first red day. So the reason why I missed this trade is it traded about 80 million shares before it performed the massive first red day right here. And first of all, I want to check out where is my maximum profitable point, and typically it's 25% above the neutralized area. So where I'm looking at will be around $4-ish. So right here, 3.4 is the neutralized area. Then we have another consolidations around 4. I would assume that maximum can only fade around 2.4 or maybe 3.7, but it faded all the way back to 2.7. The neutralized area, it dipped through the neutralized area. So that's the one that I wasn't expected, and I was waiting for a push on SHOT because there wasn't any consolidations from the previous day. So starting around 6.5, if I'm placing a short around 6, my risk will be 7.5, and I think that risk is kind of too wide. Maximum size I will be willing to comfortable sizing in is probably around 20k to 30k, and I will probably exit around the low 4-ish. So I'll make about $2 a share, and 20k shares, that will be around 40k in terms of profit. Just by looking at the chart today, I should have sized in some of the shares that I borrowed, because it's definitely worth a small size, even though the risk is way too wide. If there's a consolidations, of course you can size in 50k, 60k shares. I think it was on that Friday. The risk is too much, and there is a drastic difference on the volume, because yesterday they traded 80 million shares, and starting from Friday, it only traded about 7 million shares, I think before 10 o'clock. So it's not gonna compete with the previous day volume. That's why the stock dropped massively. And in terms of the maximum reward, typically tickers multi-day runners do not drop this far. That's the trade that I missed. So the 20k trade that I placed, which is SGD, the overall profits is around 21,000, 12,000 on success traders, and 9,000 on trade zero. This is my executions on SGD, and of course we typically want a 50% extensions on a bound short. The consolidations on SGD is around $5 to $6-ish, majority around 6, and we're seeing tickers going from 2.25 to $5, so that's extensions about 100%. I sized in a little bit early because I haven't seen a bound short for a very long time, so I sized in very small. I think it was 5,000 shares here and 25,000 shares around 4.5. So my average is total is right around right here, so 4.25, 420 to 4.25. Covered around 4.75, so only made about 50 cents on this chart. This is where the 22k came from. Not a too big of a trade because the ticker only faded about 50%. This is a classic bounce short, and SHOT, it is first red day on a multi-day runner pattern. So hopefully you can see more of those official pattern that's been coming out recently, and I wish everybody have a great trading for the last month of the year. Alright guys, thank you very much for watching. I will see you guys in the next one.